Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Mike Sokol, who's the Senior Managing Director on Nasdaq's Markets Intelligence Desk. And the question we are asking for the weekly review is, are stocks too near their all-time highs? There's a number of fundamental issues that remain, but the charts seem to be suggesting something else. Mike, as always, thank you so much for joining us at MarketSite. And it seems as if stocks are continuing to hinge their hopes on the trade deal.
Yeah, that's really the only catalyst. I think it's almost getting a little boring as every day you look for a catalyst and it's always about China. All of the conversations, the leaks, the headlines, all the suggestions are that you'll get a positive outcome, and that's helped underpin the rally along with the Fed dovishness. And if you don't, you could set yourself up for a little bit of disappointment, right. But that's really what the market is tying itself to right now.
I mean, what a difference 9 weeks makes from December, when it seemed as if everything was falling out of the bottom, to where we are right now. So I want to take a look at this chart that you pulled up here. The number of 1% moves in the S&P 500.
Right.
What can you discern from this?
I think the focus is on the bottom, that lower right part of this chart where you see February 2019. There's only 2 such moves of 1% or greater. You had 10 of them in December, and there's no losses in that, so it's just 2 gains. And so you don't have a lot of that volatility that you've been seeing. The VIX has come down below 15. It's actually below 14 today. And usually if the VIX is going down, the stock market is going up, and that's what we've seen over the last 9 weeks.
Yeah,
or so.
I mean, the Dow's back over 26,000. The S&P is flirting with 2,800. Let's move on to the next chart, where we have a 1 year of the S&P 500 up with the 200-day moving average. And this is something that technicians take a look at because it's a key indicator for you.
They sure do. And of course, you see the December, the swoon there, and then of course a pretty sharp snapback, so you're probably about 5% off the highs. And 200-day is an important one, but I think what really drove that move was the Fed, obviously. And just talking about, if you go back to December, people worried that they were going to raise rates in the face of a weakening economy, and the market was saying, hey, wait a second, we're a forward-looking indicator, not your backward-looking data. We're saying that there's a weakness in the market, and so the earnings estimates haven't gotten better. In fact, they've gotten worse in terms of what you expect for the first 2 quarters of next year. But the Fed standing pat on rates and maybe not continuing with QT, is what's helping the market move higher.
Right. So when you see stocks or the S&P trading over the 200-day moving average like this, that's pretty solid. I mean, does it suggest that there could potentially be some room to run?
Potentially. I mean, you look at the entirety of the move. The other thing is the 200-day is going to act potentially as a source of support.
Right.
But it doesn't, I mean, you can see on the chart, it kind of went right through it. It didn't really stay below that. So what you're hoping for is that momentum continues at the top end there. You'll see where the where the highs were. Maybe that's your upper end of resistance, and then the 200-day could support you.
Yeah, I mean, it's just so interesting to see what the charts are suggesting. Meanwhile, fundamental concerns do remain, as you had suggested. Even the global economic data that came out this week, particularly yesterday, was really not that strong. Yeah,
whether it's in the U.S. where you see some weakening, or Eurozone PMIs are weakening, even Germany. People are worried about China's debt, but also Europe is not doing all that great. So in terms of their economic data, and you couple that with the U.S. Slowing a bit, you don't have the fantastic fundamentals that you might have looked at a year or 2 ago.
And I think that's what traders are asking themselves, is too much optimism priced in? What's the next catalyst? Because earnings are certainly not offering
The next
that.
catalyst is China, and a lot is baked in. So if you have a really, really good positive announcement, that's what would move the market higher. If it's not what the markets expect, it could be a sell the news event.
All right, now let's talk about the trading week ahead. You have Fed Chairman Powell. He's testifying in front of a Senate Banking Committee panel next week, and that's always will definitely turn into a hot topic. And there's a number of other Fed speakers on the circuit, and then of course the GDP data on Friday, which everyone will be looking at.
All of that important. The Fed speakers have been singing from the same music sheet for the last 6 weeks, talking about more of a patient attitude towards the market and a wait-and-see attitude towards the economy. So I think that you'll see more of that next week.
All right. Well, it should certainly be interesting next Friday for us when we meet back up again. Thank you so much for joining us throughout the week. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.